It's about that time of day again, isn't it? Back in the action once again. Hope you guys had a great hump day out there. Great to be back here with you guys in tonight's video. It's Wednesday evening. It is October the 23rd, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, don't forget I help traders find high-quality setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys and gals find the best levels of support and resistance for tomorrow, the best entry and exit setups for tomorrow, and most importantly, how can I forget, how to avoid the biggest traps in tomorrow. That's Thursday's trading session, and we have quite a bit to talk about in tonight's video. We'll check the calendar for tomorrow. Got a bunch of news piled up for Thursday's trading session. Want to make sure you guys are ready for that tomorrow morning. And of course, we'll grab some charts. We got some oil, some S&P, Nasdaq, and we got that gold. We'll talk about that yellow metal tonight on the video. Speaking of yellow metal, speaking of metal, right, let's talk about the black gold here first. I'm going to jump into the crude oil futures, the Texas T, because as you can see, the black gold caught a bid here this afternoon, just kept on running. Let's get this party started here tonight on the crude oil futures, and let's get this train leaving the station here. What do we know about oil here tonight? We know I'm going to go with bullish here. I'm leaning towards the bull side here. Something tells me you can probably see the same thing as I'm seeing. But we can definitely see the market is bullish, right? We got one big leg up, barely pulls back to the moving average, and kind of grinds higher, right? And that grinding motion tells me this is one of those melt up situations. You know, melt up is basically a FOMO trade, right? It's basically what it is, right? It's a fear of missing out. And really, what could everybody be so worried about missing out on? Probably the move back up to some big levels we got around 57 here, which we'll talk about tonight on the video. So we definitely see, again, short covering rally, kind of that melt up, right, is the way we refer to it nowadays. As the market melts higher, right, shorts are getting squeezed, buyers are jumping in for whatever pullback they can get, right? And so we know the market here is very, very bullish. The big problem right now is we know we're bullish. There's no doubt about that. The question is, who wants to buy way up here? This is like having your eye on your favorite sports car and then doubling the price, right? I'm not going to buy it up here. It's too expensive up here. And I'm sure a lot of people will probably agree with me on that, right? One thing that stands out is the fact that we never got a real deep pullback, right? We never got a big correction. We never really saw any deep pullback. And that definitely tells me that there are going to be a lot of conservative dip buyers waiting to get long on this. They just need to get, maybe a quarter back, maybe a halfway back tomorrow, right? And we'll be looking to buy that pullback. What I see here right now, though, is that strong move up into what looks to be a range. Those double tops, right, and those double tops, of course, tell me I've got a range here, and I'm using that range to find my levels. As you can see, I also got that hidden channel coming down here. So we know we get a bull market. We know it's very, very expensive. And tonight we'll talk about, I got three different entry patterns. You guys we'll talk about those three entry patterns tonight on the video. Three specific ways I'm looking to buy that pullback. I'll also talk about what if we continue going sideways here. And of course, right, what if the melt up continues tomorrow? I've got two patterns that you want to be watching for tomorrow on the oil. So we know we're bullish, a little too high to buy on the black gold here, waiting for a pullback, but I will also be ready here if the market does keep going higher here. And we'll talk about those details tonight on the video. Over on the S&P tonight, S&P, as you can see, is right there along with oil. Very, very bullish on this S&P. And of course, it was a pretty easy 1, 2, 3 reversal, mark up the highs, mark up the lows, and right, buyers are buying off that low. So if you tune in every evening on this newsletter, you probably saw that pattern coming a mile away here this afternoon. The bottom line, though, is we know we're bullish in a trending market. Trending markets, they love to go to these symmetrical measured moves. So we have reason to believe they've got some targets up here around that 3,008 and change area, right? That 3008. So we know there is some resistance here overhead. They definitely haven't gone too far yet, that's for sure, because you can easily see that range from the beginning of the week, right? That is probably where they are trying to go here for tomorrow. So we got direction. We have an idea of where they're trying to go. The problem right now, though, is I don't dare buy way up here. If I buy way up here, right, my target, my reward on that is right there, and my risk is way too big, right? That risk-reward ratio is not that great. It's not that great. We can do better than that. So really at this point, I'd love to get a pullback. I'm waiting for a pullback here on the S&P. We'll talk about two patterns to look for on that pullback. Get the little swing right there. We'll talk about that in a moment here on the S&P. I'm looking for a pullback. I wouldn't be surprised also too if we go sideways here a bit. So we'll talk about how to handle a bit of a range here tomorrow. But what if this thing keeps on going? If we keep on going, I've got two patterns we'll talk about here on the S&P if it continues and doesn't slow down into that measured move. So we're going to talk a lot about pullbacks, ranges, or if it continues to blast higher here on the Emini S&P. If you're an S&P trader like I am, definitely stay tuned for more on that. How about some Nasdaq? So Nasdaq is very similar, right? Nasdaq very similar here to the S&P. We know we're bullish. You can see that spike up and that channel. And of course, spike and channels, the one thing we haven't seen yet is we really haven't seen that big correction yet. And so we definitely know there are buyers that are likely waiting on the sidelines right now, waiting to get another deep correction. Now, one thing we can see very different about the Nasdaq than a market like the oil is we haven't seen that melt up yet. I mean, it was a bull market today, but you look left and you can easily see, right, we got a big potential short covering rally back up at the beginning, really the high of yesterday's session. So one very distinct characteristic about that Nasdaq, we see the oil and we know what oil did today, right? That kind of melt up, that FOMO melt up. You could easily see this coming here tomorrow as well. So trading that melt up, and again, short covering rally, call it a melt up, whatever you want to call it, right? There'll be a very distinct personality as this market goes higher. So we'll talk about that tonight on the Nasdaq, because if you're waiting for the perfect patterns, if you're waiting for that layup setup during a melt up or during a short covering rally, you're probably not going to get it. So although I'd love to get a deep pullback, I'm definitely going to expect though to see maybe a little bit of range up here. We'll talk about how to handle the range tonight. And of course, at the same time, right, what if it keeps going? If we get that melt up, what is the best plan of attack for that type of market personality? We'll talk about that in more detail tonight on that Nasdaq. Then of course, over on the gold, the yellow metal, boy, we saw that move higher coming, didn't know it would go all the way back up, right, to retest the high of that range. Bottom line is on the gold, what do we know right now? The yellow metal has 1, 2 very big legs up to a measured move, and it looks like now moving average starting to flatten out. I've got a really big clue there for an expanding triangle. I'll tell you, I love expanding triangles. Expanding triangles are really great patterns, but they come like any triangle, there's an expiration date to them, right? The time is ticking on this expanding triangle. You can easily see here, I'd like to be a buyer off the low of this triangle, but heads up on this, I've got that trend line coming down. And tonight what we'll do is I'll kind of talk about how to use that trend line for your key area of support here. It might get a little bit bloody before we get that nice entry off that trend line, but we'll talk about some patterns to think about so you're not buying, not trading inside the middle of that range. So bottom line is we know we're bullish. We know we're going into a range. The range is important because it gives me buy zones and it gives me sell zones, right? Buy low, sell high on that range. But most importantly, though, I've got that expanding triangle. And if I have it my way, be buying off the low of that triangle, profit up at the high of the triangle, and then, well, we'll talk more about how to sell it because it's going to be a lot more difficult to sell off that high just because of, well, the overall momentum. So as you can see, we have quite a bit that we're going to dive into tonight. Expanding triangle here on the gold, potential for a melt up on the S&P and the Nasdaq, and again, already a melt up here on the crude oil futures, right? We'll talk about all those details tonight. Before we jump into the video, though, I always want to remind you guys to make sure you join our mailing list. Because remember, right before I publish this video on our blog, I email out to everybody so that you know it's ready to go. So every evening, I send an email out to everybody on our list, and I want to make sure you get that email so you know exactly when our nightly newsletter goes live. It's very, very easy to register. All I need is your name, your email address, hit that subscribe now button, and then don't forget, when you subscribe, your job isn't over yet. You'll still need to go in and check your email, check your inbox, because I'm going to send you a welcome email. And inside that welcome email, you'll find a bunch of free, great resources for you. And you'll see a verification link. Okay, that verification link is necessary for you to click on that verification link. Give me the approval to keep sending you emails every evening when this nightly newsletter goes live. So don't delay, right? Grab the mailing list, first name, real email address, hit that subscribe now button, then check your email inbox, check your spam folder too, because sometimes those welcome emails, sometimes they get stuck on your spam filter. Oh, and don't forget, if you have any questions here tonight, any questions, any comments, any feedback, that's what the comments section is for. You know, especially if you're here for the first time today. If you're watching this video newsletter for the first time, welcome aboard. If you have any questions, drop those questions in the comment section below. I'm always checking out the comments, always making sure to give you guys the answers that you need. So don't be afraid to post those questions down in the comments section. Or maybe you've been watching this video consistently for a few weeks and you got some feedback. You know, I always like the feedback personally. I got a real thick skin after doing this for a long, long time, almost 12 years here at School of Trade. So, of course, I'd love to hear your honest feedback, constructive criticism. What would you change about this newsletter? Right? What would you change about this video? What would you do more of? What would you do less of? I want to know more about what you guys love or hate or dislike, I guess would be the better name, right? Maybe not hate, right? But what would you change about this video newsletter? Drop that feedback in the comment section below. And then one big favor I need to ask of you here tonight, if you tune in every evening and watch this video, if you get a lot of value out of this every evening, hit that thumbs up button for me, will ya? Because believe it or not, every time you hit that thumbs up button here on YouTube, YouTube helps to expose this video to other traders who we all know want to learn this great strategy. So guys, drop those questions in the comments section. Don't hold any feedback back. I want to read that feedback in the comments. And again, hit that thumbs up button. And I always appreciate you guys spreading the love here or supporting me spreading the love here, right, with this price action strategy here on the blog. And don't forget, if you have any questions, you can always call that toll-free phone number, 800-381-2084. I'm always here. Right, always here. No call centers, right? No answering machines. Call that toll-free phone number. We'll pick up the call. Answer all your questions. I realize that most websites are all automated systems these days, but I'm old school. I love talking to you guys. I love teaching and trading with you guys every day in our trade room. So don't forget, call that toll-free phone number because I'm always here to help out every step of the process. In the meantime, though, let's get this party rolling here, huh? The train is leaving the station. Thursday, tomorrow, coming up at you. We are squeezing out the last few drops of this fourth week of the month. Don't forget, as I've mentioned a couple times already this week, we are getting earnings pre-market and post-market right now, right? So after the close and before the open, got a big long list of earnings reports. I'm not going to bore you with the details of the individual markets that are going through earnings, but what you do want to be aware of is the S&P and the Nasdaq, most specifically the Nasdaq, because the Nasdaq has a much higher proportion, the FANG stocks, right, the tech stocks that really make up the bulk of the Nasdaq. So Nasdaq stocks having earnings overnight and early morning tomorrow will definitely give you some whippiness in the overnight session right now. So if you're in Asia, if you're in London, and you're trading the E-minis, just be aware, right? Be aware you will be susceptible to whipsaws that you don't normally see in the overnight session. Not to mention, speaking about the overnight session right now, we're hearing more headlines out of China regarding the kind of situation between Hong Kong and mainland China. Who knows how much that will affect the Asian session here in the next couple hours. Headlines have been leaking out all day about that. And let's not forget the never-ending soap opera that is the Brexit, right? Brexit, of course, in the London session. Who knows, right? Again, I'm not going to bore you with the details about what they're talking about right now, but those two situations are in play. Actually, three situations, right? Earnings overnight. You got the Hong Kong, right, mainland China situation, and of course you got the Brexit deal in Europe. So all three of those kind of underlying factors, I'm not going to go into more details on them, but those are what are affecting these overnight markets. Okay, so be aware in the overnight, careful. Now tomorrow, with us in the trade room, we open the trade room up every morning, Monday through Friday, 8 o'clock Eastern time. We got a whole bunch of news tomorrow, don't we? We got some durable goods and some jobless claims at 8:30, and of course we got the new home sales number at 10 o'clock Eastern time. So if I had to guess tomorrow, Usually that durable goods order is a pretty good news number for us. So we'll definitely be looking for that. But if I had to guess where the kind of the meat and potatoes would be, I would definitely say that new home sales. We saw how much the home sales number impacted the markets on Tuesday. I would expect the new home sales number tomorrow morning at 10 o'clock shock is going to be the big market catalyst that everyone will be paying attention to. Now, of course, also too, we got a lot going on in the U.S. session right now, right? We've been hearing more about the issue in Syria. We've been hearing more about the impeachment inquiry. Again, I'll let you use whatever your favorite news outlet is for that, but those are the underlying factors that we are keeping our eyes and ears open for together in our trade room. But again, as I always remind you guys, the news is noise. We don't trade the news, right? We simply let the news, we let the markets react to news coming out tomorrow, and we trade the reaction. News is noise. The price action is the key, right? Price action you see on that chart. So tomorrow morning, get with us tomorrow morning, 8 o'clock Eastern time. We'll have a front row seat for that durable goods order at 8:30 and the new home sales number at 10 o'clock Eastern time. Speaking of price action, speaking of let the technicals do the talking, let's grab some technicals here for us tonight. Don't let the news media make you think these charts aren't what's really leading the way, because we all know they are. Let's jump into some oil here first. We have some oil, some S&P, some Nasdaq. I'm not gonna beat around the bush here on the oil. We're obviously bullish. It's a very big leg up. That melt up, as I mentioned earlier, right? Anytime a red candle, buy red candle, buy red candle, buy red candle, buy red candle. Okay, that's basically the only way to trade a melt up. When you have a situation where you see a big strong pullback or a big strong move higher, and you don't get, a quarter, a third, a halfway pullback, right? You don't get a very deep pullback. You don't let buyers buy into it. You know what I mean? The buyers were waiting on that pullback. Everybody was waiting for them to take some profit at the 55 and pull it back so they could jump into it again. When you see a market, just so you know, when you see a market make a strong run up like that and keep going, right? Once you start seeing this thing keep going, now you know, okay, we're not going to get that picture perfect golden ratio, moving average cross, volume pull, right? We're not going to get it. It's not going to happen, right? And if we do get it, it's going to probably stop you out and then run without you. So you got to be aggressive in these types of markets, these types of melt up or short covering rally type of markets. The best strategy is buy the red candles. Buy the red candles. Your broker's going to love you. You're going to bunch of commission that day, but really the goal is keep buying low, keep buying low, keep buying low. Okay, keep a tight stop, buy low, you get stopped up, buy it again. That's the only way you're going to trade it. The only other way to do it is to wait for that melt up to slow down and start going sideways. And that's what's happened here now as we go into that $56 a barrel. So again, the clue here is when you see a strong move up and you don't get that two-legged pullback in that retest, you get zero pullback, and you start seeing it nudge higher, okay, that's your cue. It's either buy red candles or wait for the range. Those are your two options. So now, as we finish up the session here today, what happens? We see double tops. And that double top is usually a giveaway that we're going into a trading range. What's a range? A range is balanced, isn't it? Right? Balanced market. So it looks like we started out to find some balance here around that, $56 a barrel area, 55, 85, give or take some change here. So now, remember, there are still all those buyers who are waiting for that deep pullback. They're still waiting. They're still waiting here. And so what they're going to do now is start to find some levels of support. We mark up these highs. We bring it down to that low. There's a beautiful level of what I would call a hidden level of support there. What else can we do? We take that trading range, right? At this point, all we know is just the double tops and that low. We take that range. We copy and paste it down. We find levels of support there. We also look left. And we can see that, keep going, there we go, right? That level at 93, right? We find that as a prior high. That becomes a level of support. Okay, so now we know we're bullish. We know we're very high up. We want to be a buyer on a level of support. Now, whenever we talk about buying pullbacks, there's one word that comes to mind. What is it? Momentum. Yeah, momentum. Well, yeah, we'll spell it all out for you, right? Momentum. I think that's how you spell it, right? Yeah, momentum. So momentum is all right. And this is what day trading is. You've got to understand how to read momentum. For example, if we see a shallow pullback, right? A shallow pullback has a lot less bearish momentum than if we were to see a real deep pullback. Does that make sense? So the type of pattern I'm going to use on a shallow pullback will be a whole lot different. Well, not a lot different, but it'll be significantly different than the pattern we use on a really, really deep pullback. Does that make sense? Okay. Why? Because of momentum. So first of all, I've got this, right? I've got my buy zone and my low of that channel. What I really like to get right now, if I kind of zoom in on this just a little bit here, get a little more intimate, right, with this chart here right now, and we'll talk about what if it goes higher here as well. But if we get that pullback, right, we get that pullback down towards a low of that channel, right? At that point now, what's going to happen is all the bears are going to come back in the market, and they're going to say, see, I told you this, 2618 extension, it's holding, so we should sell this, right? You'll see some random pivot point, right? Will come out of thin air and say, see, we should sell this. It's too bullish to sell this market right now. The only selling you want to do on a market like this is taking your profit. So we do get that pullback, right? You're going to have a lot of rookies out there like I used to do saying, well, all right, we've gone too far. Let's try to sell this thing now. We're going back to 55. We're going back to the low. Whatever the case may be, we're going to likely see with that pullback, buyers are waiting to buy that pullback. My favorite way to do, though, is wait for those sellers to try to sell off that moving average. Wait for those bears, right? Wait for that pullback. Get that moving average coming over. Sellers now are in the weak hands. The counter trend sellers will try to sell off that moving average. And at that point now, we know exactly where their stops are, right? We know exactly where their pain begins, right? Isn't that the most important part of this? That is the most important part. So counter trend sellers, they try selling that first pullback in a very bull trend. We're down around levels of support. We're inside the buy zone. We know now where their pain is. And I'm simply looking for a buy right now, right into those pain points, right into that stop loss. Now, from there, we oftentimes pull back. And on that pullback, I can now look for that re-entry or add-on, depending on how far this move goes higher. Okay, I call this a failure pattern, right? A two-try failure pattern. And, of course, a pullback pattern as a follow-up. Okay, very, very easy combination setup. Now, what if we really pull back, though? If we really pull back, it'll probably be one of two scenarios. Either a 1-2, we'll draw a trend line down and use that trend line as my key level of support, right? We call those 2LPs or two-legged pullback patterns, okay? Or we may see a straight line down. Again, imagine we really push here. And at that point now, what's the problem? The problem is it's way too bearish just to try to buy into a stop loss. So what I'm going to do is I'm going to let those bears now try once to sell, try twice to sell. Hey, maybe we get lucky and we can do it on the underbelly of that channel. Not necessary for the underbelly of the channel, but what is necessary, though, if we end up all the way back down, right, down to that reversal line, if we really end up pummeling lower here, what you want to remember is all of that bearishness, the bears aren't going to give up that easily anymore. They're going to try once. They're going to try twice. You want to see them higher highs there. One try for the bears, higher high. Two try for the bears. And now again, we know where their pain is. And now we're looking for that failure into pullback combination. That failure, again, we're buying into those stop losses of those counter trend sellers, and then of course looking to buy that pullback before we go back up to retest that high. Now you might be wondering right now, how would that turn bearish? How is that not a bear market? What would a bear market look like then? A bear market would start off with a strong move down. It would then pull back to the moving average, and you would see a strong move off the moving average. We call these a 1, 2, 3 reversal. Strong move is 1, 2 is a pullback to the moving average preferably, and 3 is a strong jump off the moving average. The real key to this is that strong jump off the moving average. Now, once you see that 1, 2, 3 reversal, now what we'll do is we'll find a new trend line off of those lows. Okay, that's oftentimes all you really have to work with. And then we'll mark that up at the high. That becomes my hidden channel. And now I look for a short off the high of that hidden channel. Now, where would our target be for that 1, 2, 3 reversal and that hidden channel, right? That target now is going to be all the way back down, I would imagine, right? Back down to that range, somewhere down around here for tomorrow. Remember, easy come, easy go. If it can move this quickly up today, if we get some turn of events in the Middle East, who knows, right? This could easily go right back down again. Again, I'm not saying to trade the news. I'm just simply, if there is some sort of headline that spooks the market, what goes up so easily could easily make a run back down so easily. Okay, so now we know in the pullback here. What if we keep going sideways though? Does this market change if we go sideways? Is there anything that we have to know if this thing starts going sideways right now? Well, if it goes sideways, not a lot changes. We know we're bullish. We know we're balanced. We know there's a big magnet. Think of it this way. The longer we spend in one area, the more the market likes that area. So when it pulls back, it's going to probably go right back in. When it goes up, it'll probably come back in, or at least try to come back in, right? So the longer it stays inside that range tomorrow, the more durable that range will become, and the more magnetic that range will become. What's the best way to trade a bullish range? There are really two ways to do it. One is going to be a 1-2 failure pattern underneath the range. And again, this is just like we talked before. You want to let those sellers try to take the market lower, get them to try to sell off that pullback, and then you know exactly where their stops are. And those stops are what fuel this puppy to go right back up to retest the high. Because if you're a seller and you're foolishly trying to sell that breakout pullback, rookie traders, I know because I was one, rookie traders love breakout pullbacks. Right? They feel like they're very easy to learn, right? Some of them work, which makes it easy for rookies to kind of back test, so to speak, and fill them out. Rookies, again, I was one at some point in my career. Rookies love breakout pullbacks. So that breakout pullback is a great way to pick the pockets, if you will, of those weak hands in the market tomorrow morning. So we know we've got that opportunity here below it. How do we buy above it though? Is it possible to be a buyer as we go through it, right? I mean, so like what if we do go sideways? What if we do go sideways here for a while? Can I trade a breakout? What type of breakout patterns could I use on this? Okay, there's two breakout patterns. You ready? One of them is a 1, 2, 3 breakout. I know, very clever, right? It's the exact same thing as the 1, 2, 3 reversal. Okay, mark up the highs, mark up the low. Remember though, very, very important you remember here, it's all about that jump off the moving average, isn't it? It is. It's all about that jump off the moving average. That initial break higher is not the key, okay? That's not the key. The key is, can we hold that pullback with some strength, right? With some momentum strength as we go higher. At that point, I'm going to mark up that high, mark up that low, looking to be a buyer, okay, off of that low. Now, if they can jump, right? If they can jump up through the high of this range on a 1, 2, 3 breakout, forget about the measured move. They're trying to get up to that 56.64. And if they really get going, they've got that half back at 57.17. Remember, there was a September high all the way up at 63.25, right? Back, that was kind of the high. I believe it was the drone bombing, right? That the drone attack on the Saudis, right? That high, 63.25, that's the halfway point. So if you're to measure the distance of that high, in September at 63.25 down to the recent low, that's your half back. And that's likely where, if you kind of imagine, right? This was that drone attack. We had that big drone attack up. We come all the way back now, and now we're kind of melting higher here. That halfway point will be a very, very easy place for basically sellers to look to sell more, for buyers to use as an objective. And so that's kind of what we're eyeing here right now, is that, again, that 57.17 area. That's a big bite to chew on tomorrow though, right? So we got to get a really strong push higher here to get that. What's the second pattern though? What is the second breakout pattern? The second breakout pattern is going to be the 2-try breakout. or what we call the FOMO breakout. Okay, this one you do need to have that strong breakup, right? You got to have that strong breakup. It's all about the initial strength. That strong move has to trigger FOMO, the fear of missing out. Now, at this point now, you don't want to just go out and buy it high. You want to wait for a pullback 1, a higher high, a pullback 2, and I always go looking for a trap low on that, especially since you've got that overhead resistance overhead. So definitely a trap on this. Remember, the first pullback is usually just profit taking from the buyers who got lucky, right? The second pullback is the sellers actually entering that market. And of course, professional buyers now are waiting here to pick the pockets of those sellers, because now all the short sellers who are getting squeezed out of this trade, they're getting squeezed, they become buyers. And all of the profit taking from that first pullback, that will now encourage the buyers to jump back in again. So you've got buyers chasing after it at that point. You've got sellers getting stopped out. We call that a 2-try breakout pattern, or as I affectionately call it, right, the FOMO breakout pattern. All right, so now you guys know the basic plan here. We've got 2 patterns going long, right? We got a couple patterns, 3, 4 setups on the pullback. We know what to do with a range, and we know what a reversal looks like. Perfect. Now, I want to keep going to the S&P right now, but if you're here for the first time, I want to give you a whole lot more details here about these setups. And what I'll do is I'll give you access to our free trading classes. I'll put a link in the upper right-hand corner here for you. I'll also put a big red button for you below the video on the blog. So if you're on the blog at Sideways Markets right now, right, check out that big red button below the video tonight on the trading blog. So bottom line, though, is grab that free course. Again, linked up in the upper right-hand corner. Grab the free course. You'll learn my 3-step strategy, the same strategy we use in our trade room. You'll see hundreds of examples of my 4 favorite entry patterns, right? Failures, strength, pullbacks, traps, right? Grab that free course in the upper right-hand corner. Okay, follow the steps to register, and I'll see you inside that free course. You're going to love it. Everybody loves the free course. I really enjoyed making it for you. So make sure you grab that free course in the upper right-hand corner. That way every evening you can get the most out of our time together on this video newsletter. All right, let's keep going. How about some S&P? S&P and the Nasdaq are both in, relatively similar situations right now. We had that big move down from yesterday. Big move down from yesterday, as you can see. And it looks like now the market now is starting to realize, okay, we're probably going back to retest those highs. So the S&P's got plenty of room to go. The one problem right now is we're a little bit too high to buy right now. Like I mentioned earlier, if you watch my newsletter every evening, this was a 1, 2, 3 reversal where they jumped off that moving average. So you mark up that high, mark up that low now, and you've got that 1, 2, 3 reversal into hidden channel pullback. And you can see, right, that was a beautiful seller failure where buyers were buying right into that pain point. That's exactly what we teach every night on the newsletter, and a great example this afternoon on the S&P. So I know a lot of you guys, I get emails from you guys, I know a lot of you guys got in off of that, right, off of that seller failure, off the low of that bull channel. But now what do we do? Right now we're way up here, and as I mentioned in the introduction, if I buy here right now, I got to take some profit off of the measured moves. I don't know enough about how far it will go, and my stop has to at least be down right in this area. So you really can't protect yourself very well by buying here right now. So we know we're bullish, but we're just too high, right? We're too high to be a buyer. We have room to go, but I don't know if we're going to go. I just don't know if we're going to go through the measured move, or if we're going to hit it and bounce. That's the hard part. Remember, we saw something similar, right? We had 1 leg up, 2 legs up early. Look what happened, right? They hit the measured move, they bounce, and you buy into it. So we might get that again tomorrow, right? We might get that bounce again tomorrow, and we'll see what we get on that pullback, or it may keep running. So I want to get ready for both of these, right? I'm going to get ready for both of these scenarios here. So first of all, what if it pulls back? If it pulls back, I've got the low of that channel here, right? That will definitely be on my radar. I've also got the 97.5 area. You'll notice that's a really nice looking prior high. So really this whole area here, you can really kind of look at this whole area there in all reality, is kind of that buy zone at this point. So what we could do is we're going to add in a little bit of Now, the only caveat to this, though, is that you don't want to be buying the low of this channel if that low is really close to this measured move. Okay, that's kind of the big variable here, right? I want to buy off the low when I can go risk small, earn large. I don't want to buy off that low when I'm sitting right here. Does that make sense? Right? There's a big difference between these two types of patterns, okay? This is probably a 75 to 80% buy, whereas this one's probably closer to a 45% buy, give or take a few percentage points there. The reason why I say that is because of location, right? The location, we have that level of resistance up overhead. If you can risk small to earn large, you'll get a much higher winning percentage off of that because everybody else will be excited about taking that trade right there with you. And because we all benefit from the wisdom of crowds, right, and the self-fulfilling prophecy, it kicks up your odds of success, right, quite a bit when you've got a good risk-reward ratio on that trade. So the one caveat about this is just be careful trying to buy the pullback, right, if we're still dealing with that measured move here for tomorrow. Okay, so we're going to get the pullback here right now. If we can get that pullback, I'm looking for the same bread and butter that we saw earlier, right? That failure off the moving average. I mean, you see what happened, right? Market was bullish. We pulled back to the moving average, or pulled back to the low of the channel, where we start looking for an entry. We see the price pull back to the moving average. You can see there that red candle, big wick. Okay, that tells us now bears are coming in. That now tells us now right where their stops are, and we now can buy into those stops. In this example, they never get the pullback. As I always kind of remind you guys, the pullback is kind of the variable. The failure pattern is pretty easy to find. The pullback, sometimes we just don't get it. Like this one, right? Just kept on going. Sometimes you do, sometimes you don't. So again, example, we get a pullback here, get below that moving average, bears come in, try to sell off of it. Now we know where the pain point is. Now we can buy into that pain point. Sellers become buyers as they get stopped out, and the market will race higher. Then we wait for the pullback from there. As that pullback comes over, oftentimes it comes very, very close, right to where that original pain point was, and we can get right in again, either add to your position, or a lot of times what happens is you'll get that 1-to-1 first target, and you can add on right on that pullback from there. So a couple different options there. We'll talk more about the strategy of getting in and getting out in that free course that I mentioned earlier. You'll learn a lot more of the specific entry techniques as part of that free course. And then what happens if we just keep running here? Well, if we keep running, again, we know we got a measured move there. So if we keep running, we bounce. Measured moves are very, very reliable for a double test. So failure, pull back up. So just because we get to a measured move and then pull back doesn't mean we're done. Again, go back and look at what happened before. We got the measured move earlier. We pulled back, failure, and back up to do it again. So, don't think for a moment that just because we get the measured move, you can't buy a pullback now. Just make sure, though, like I said, you don't want to buy into that measured move. You want to wait for that chance here now to buy nice and low. Failure pattern, pullback pattern, and we go. Now, sometimes, as we open up here in Asia, sometimes we go to a measured move and we keep on going sideways. In this case, take the size of that range, find your range expansion levels now, right? Take the size of that range, find those range expansions, and look for that one try, that two try. Remember that pattern before? Let those breakout pullback sellers, let them try to sell that breakout pullback. You know right where the stops are now. That's the reason why if I'm trying to buy a deep pullback, I just try to put myself in the shoes of those rookie traders. What would I have done almost 15 years ago? Where would my entry have been? Where would my stop be if I took that trade? And think about that's where my entry is going to be, going back up in the opposite direction. Remember, it's all about probabilities, right? Trading is a game of pattern recognition, probabilities, and a whole lot of discipline, right? A whole lot of emotional discipline, psychological discipline, right? So we know that the price reversing is probably only a 35%, a probability, right? That means you got 65%, last time I checked, that's the math on it, going back to retest the high. Which side would you take, right? Which side would you take, right? Do you want the 65 or the 35? I think that's pretty easy to tell right there. Now, as you can see, they may still be going higher here, right, as we try to go higher. What are some options as we go higher? We talked about them earlier. It is the 1, 2, 3 break higher. I have no problem being a buyer, but I've got to get some proof here that they can hold that pullback. Then we'll mark up that new channel, find that new channel, and we're buying off that channel low. Or it's a strong move up, 1 try, 2 try, trap low, and we're buying off that trap low. Does that make sense? Okay, those are the two patterns. If you want me to buy up here, you better prove to me that you got some legs, because just a couple green candles is not enough. I've got to see an up, a pullback, and a go. Hold that pullback off the moving average. Show me you want more. Then we'll go out, mark up our new channel. I don't want to buy after it. Right? Don't chase after it, because when you chase after it, your risk-reward ratios are out of whack now. Right? You're going to lose a lot of money that way. You'll get lucky during those big runaways, but you'll give the money right back in the long term, because not every market will be a runaway. Not every market's going to be a runaway melt-up situation. Okay? A lot of times you see head fakes at these highs. Okay? So 1, 2, 3 breakout into hidden channel pullback, or strong move up, 1 try for the bears. That's profit taking, higher high. 2 try for the bears. Trap low, right? Nice big trap low for a hump day trap low. And of course, what we call it again? A 2 try breakout pattern. I love those patterns. But remember, you've got to have strength. It's all about that move higher kicking us into FOMO gear. Okay? That's what it's all about. That's what it's all about out there. Okay, so now we know buyers have it, right? Buyers have it. We're trying to get a pullback right now, but the only way for me to be comfortable being a buyer up here is if I see that 1, 2, 3, mark up that new high, buy the pullback, or if we get that strong move up, 1, 2, trap and go. Other than that, I'm either watching for a range, 1 try, 2 try to buy underneath the range, or we're waiting for that pullback, failure into pullback, back up to retest the high. S&P is looking great. I've talked a lot about different patterns here in this video so far. Again, make sure you grab that free course in the upper right-hand corner, or hit that big red button for me below the video tonight on the trading blog. Let's keep going. How about some Nasdaq? Nasdaq gapping up here right now at the open in Asia. But I'll tell you, there's one very distinct difference between the Nasdaq and the S&P. Look at the S&P. The S&P is almost all the way back to where it came from. So you really got to worry about getting stuck buying high on the S&P right now. You look at the Nasdaq, right? The Nasdaq's got the lay down seats, right? They got the slippers there. They're getting comfortable. There's plenty of space, right? Plenty of space. Leg room, head room, right? Wrist room, everything. Tons of space here overhead for this melt up to continue. Okay, so now you know what you're looking for, though. Now you know the personality of a melt up, right? So let's talk about this. Let's break this baby down. Take a look there at the Nasdaq here tonight. First of all, again, I got a bunch of great emails from you guys here today. A 1, 2, 3 reversal, right? Coming in off a failure pattern off of that low. Beautiful. I mean, we've been talking about these. We've been talking about these all night tonight, right? There's your 1, 2, 3 reversal, hidden channel pullback, failure off the low. Do it again. Off that low again, failure off of that low again. So as you can see, the patterns are really, really simple. You know, and again, you'll learn kind of the mechanics of those patterns in that free course. Okay, I don't want to show you guys what happened already, because you guys already know what happened already. Let's talk about tomorrow. So we know where we are. We're bullish, and we are up around the high of that channel. What's happened so far around the highs? Profit taking. So probably not a good idea to be buying up here. I know. Your favorite guru on CNBC says buy everything right now. I get it. But, you know, if you're going off tips off CNBC right now, make sure you put a lot of that capital on the side somewhere so you don't lose it all, because it will be lost pretty quickly here. The chart right now tells us if you buy here right now, right, your target's pretty small and your risk is huge, because this could easily pull back, stop you out, and keep on going. That's the biggest problem with buying high. You're susceptible to the smallest of pullbacks, or else you have that white knuckled game where you're, how far will it go against me, or you're trying to scale in, but scaling in requires a six-figure account. So the bottom line though is we know we're bullish, we know we're at some major levels of resistance. We're too high to be a buyer right now. 1, 2, and 3. Triple measured move. Now, these are relatively small legs. We still got plenty of space to go higher, right? I'd like to look for basically 3 scenarios, if you pardon, kind of simplicity here, right? What if we go higher? What if we go sideways? And what if we pull back, right? And isn't that what it all kind of boils down to right now? So first of all, we know we want to get a pullback, and that would be the ideal scenario. Do we get a relatively shallow pullback, get below the moving average for a failure pattern into a pullback, going back to retest the high? That's an option off the low of this channel. That is an option. Okay, so failure pattern into pullback pattern off the low. That would be ideal. But what if it really rips lower? Right? What if it really rips lower? Then what do we do? If it really rips lower, what's going to happen now? That momentum now is going to be a little bit too much just to buy into stops. What we'll look for here is 1 try for the bears, 2 try for the bears. What do we call that, by the way? This is a failure pattern. It's called a nested failure. It's just a slight variation of that failure. It's a failure pattern on a relatively shallow pullback because, only the weak hands in the market are going to have their stops right above that high. And there won't be a lot of sellers in the market at that point. So that's a very weak area. It should be easy to break right through for that buy going higher. But if you get a really strong move lower, though, that'll trigger the algos. You'll see us. I'm sure you'll see some professionals in there, but I'm sure most people right now would be very careful trying to sell this market right now, especially what we're seeing here on the charts. At that point, though, you got to think there'll be a lot more bears to kind of defeat in this situation. And this would be a good example where, remember, it's all about momentum. Even though I want to be a buyer, even though it's probably going to go back to retest the high, still doesn't mean I can just buy it. Because for all I know, they'll hold it and run me out, and we get a 1, 2, 3 reversal, and we should be waiting for that to sell off of that high, right? So that's the problem with a deep pullback. A deep pullback, really deep pullback now tells me, okay, sellers, they're going to throw the kitchen sink at it. And we'll let them try once, get a higher high, try twice. Once we see those bears trying once, trying twice, bingo, now we know where stops are, and we're buying into the stops from there. It's all about momentum on that pullback. Now, what if we keep going sideways up here? We are 3 legs up. Not a guarantee to stop going higher here, but it's possible. Anything's possible. If we do go sideways here, whether it be a range or a triangle, what do? We use that range to find our range expansion levels, right? Those range expansion levels. You'll see those here on the gold in a moment. Once we have our range, then you'll know where your levels of support and resistance are going to be above and below that range. And I want to buy underneath the range because it's a bull market. So we got 2 options, right? If it goes sideways here, it'll be a 1 try, 2 try, failure back up, or it'll be a 1, 2, 3 breakout into that hidden channel pullback. Makes sense, right? This is kind of a culmination of everything we've talked about here so far. So again, if we go sideways, we're bullish, we're balanced now. Remember, the longer we sit inside that range, the more votes are cast for that area, the more of a magnet that becomes. Mark up that low, wait for the 1 try, just get a breakdown. Okay, get that moving average coming over. Let those sellers try to sell off the moving average. Now you know where their stops are. Just make sure, though, that when you're taking those failure patterns, you don't want to be inside the range. Ranges tell us to buy low, sell high, and avoid inside the range. Okay, that'll be your failure pattern. And again, what do we call that? We call that a 1, 2 try failure. We call it a 2 try failure because there's 2 obvious tries. Like back here, right? 1 try for the bears, 2 try for the bears, back into their stops. 1 try for the bears, 2 try for the bears, back into their stops. Now remember, we don't take this pattern every time we see them. You just want to take them at the right locations. underneath a bull range, at the low of a bull channel, etc., etc. Okay, and you'll see more of that inside the free classes that I keep mentioning linked up in the upper right-hand corner. Now, if it does go sideways, that doesn't mean it can't keep going higher. But when we go sideways up here, it's definitely telling us that the market doesn't see value in prices going higher. So if we see a breakout, we've got to be careful. Those breakouts oftentimes come right back down in. In fact, remember, if it breaks out and comes right back down in, use the size of that breakout to find support on the side, 1, 2, and back up from there. We called it the pendulum swing, right? Okay, I'm getting too far ahead of myself though. Let's get back at it. So we know it goes sideways. If we break out, again, double tops, double bottoms, break out, 1, 2, 3. Remember, strong jump off the moving average. That's the key. Mark up that high, mark up that low. There's your new channel. Okay, I'm going to warn you about this. These happen fast. Okay, that little pullback will sneak right up on you. Okay, I'm going to warn you. Remember, it's not about the first breakout. It's about that 1, 2, 3. It's about that jump, right? That jump off the moving average there. Then you know the market is broken free, and you can buy the pullback from there. What other option could we use? We could also use that 2-try breakout pattern, right? Strong move up. But remember, you need that strong move in this situation. Then you can grab the 1, 2. Now, in this example, though, as we go higher, honestly, as long as you get those 2 tries, you should be okay. You won't need that trap because you got all that open space above you, right? There's a lot of open space waiting above. So if we get that strong move up, it's 1, it's 2, and go from there. If you get a trap, even better. I mean, don't get me wrong, right? The trap will be even better. Trap low, I mean, that's just the icing on the cake. But 1 try, 2 try, 2 try breakout pattern. FOMO breakout pattern. Now, I talked earlier about the melt up. What's the characteristic of a melt up? A strong move up, and we don't get a pullback, right? We don't get that pullback. We don't get underneath the moving average. Okay, that's kind of the trick. If you go back to oil, look at that oil chart again, they never really get below the moving average. So if they get a strong move up and they pull back and they kind of kiss it, right? They're all lovey and they jump again. Okay, that's your cue right there, melt up. Right now, the only other way to do it is if you want to get aggressive, you're buying red candles or waiting for the conservative entry off the low of that hidden channel. Okay, so again, when you see that melt up environment, you know you're not going to get that perfect 2-legged pullback to a fib level with volume pro. You're not going to get that. Okay, you're not going to get that perfect textbook setup. Just because textbook setups, they almost only happen in textbooks. So now we know how the market wants to go higher. Okay, don't forget, bear market, what is it? 1, strong move down, get below the moving average on strength. 2, hold the pullback. You got it. Mark the low, mark the high now, and sell off that high. Target is back down to 78.10 for those bears. Doesn't look good for the bears right now, but the day is long tomorrow. We're just getting this market open in Asia right now, and this could easily keep popping higher. How about some yellow metal? How about some gold here tonight? So gold is your classic bull market into a trading range. It's a bull bias into what really is a range here, right? Up, down, up, down, up, down, up, down, right? Very narrow, very choppy range there. So really at this point, we know the market is bullish into a range. What does a range tell me to do? It tells me to sell high, it tells me to buy low, and it tells me to avoid the middle. The size of that range is what determines the size of the buy zones and sell zones. You'll learn a whole lot more about ranges inside that free course that I mentioned earlier on in the video. Again, right, that free course is linked up in the upper right-hand corner, that information icon, okay, in the upper right-hand corner, or grab that big red button below the video tonight on the blog. Let's see here. Looking at a range, I want to buy low, I want to sell high. We're bullish, so I want to look for some support areas. I've also got what is known as an expanding triangle. Okay, so you mark up your trend line off those lows, you mark up the trend line off that high, and ultimately what you're looking for here is looking for rotation. Looking for the rotation off that low and then back up to that high. Buying off that low, right, and then up to that high for your target. Now, once we get back to those highs, that momentum will be way too strong to be a buyer. So what I do is look for a crown reversal now to sell it back down again. We also know, as I mentioned in last night's newsletter, this technically is one big trading range. There is a trend line down here, a trend line way up here. There is a chance here we may rotate all the way back down. So those are kind of the three scenarios here that I want to make sure you guys are ready for. The big variable I see is this trend line coming down. What I'd like to do is I'd like to see us make a run lower, get up, see a seller failure with a pullback and two-legged pullback combined. Two-legged pullback, failure, pullback pattern, all wrapped into one area. We may see three, a kind of a trifecta, if you will, right? A triple crown setup, if I might elaborate, right? Add some color to the commentary here today. The bottom line, though, is we've got that trend line, and I want to try to use that trend line as my key area of support. So think about as we go lower, I'm looking for that moving average coming over. I'm looking to stay out of the range. I want to see those sellers coming in off the moving average so I can then buy into their pain point, use the moving average, then again, 1 second there, and then get the pullback from there. Okay, so that's the general idea. It's a failure off the moving average with a pullback once we go back above the moving average. Now you'll notice earlier on in the session, they weren't able to really do anything for us because they're stuck right in the middle of that darn range. So be aware, I don't want patterns inside the range. They're just not going to be very reliable overall. Yeah, there's always an exception to every rule, but we're not trying to play the exceptions. We're trying to play what's most reliable over a long period of time. So we know that's going to be our trend line. Okay, what I'd love to see is go down, moving average comes over, we see some sellers coming in. Now we know where their pain points are. We've got a two-legged pullback above it, a failure into a pullback, and back up as we go, right? Now I know that my drawing skills aren't the greatest in the world. I have seen plenty of Bob Ross on YouTube, but I'm still trying to make these happy little candlesticks look better for you every time, right? So again, I'm just marking up the charts right now, kind of illustrating what I'm looking for here tomorrow. A failure pattern using that trend line, failure pattern or two-legged pullback pattern again off the trend line, failure, and of course into a pullback pattern. Hundreds of examples of these patterns inside that free course I mentioned earlier, right? So again, if you want to see more examples of what these look like on a chart, right, grab that free course. You can see more examples there. Okay, again, don't forget, you don't want to trade the middle. Okay, so if we sit here right inside that middle, stay away. Stay away. It won't be very reliable. Wait for the one, wait for the two, wait for that two-try failure pattern, and again, buying off that low. Okay, now, what if we get that run up all the way to the high up there? Now what do? We consider selling it. Okay, and I say consider because you may not get a shot to do it. But as we go higher here now, we want to look for that crown reversal. Okay, the crown reversal is going to be a pullback for the buyers try once, a pullback the buyers try twice, and it's a trap high. And the reason why you want to trap on this is because you are effectively trading against the trend at that point. Right? You're a seller in an overall bull market. Would you agree? Okay? Not just an overall bull market, but a very strong move up from that bull market. We call this a crown reversal pattern, right? Buyers buy one pullback, they don't retest the high. The buyers try again at a lower price. Remember, buyers want to buy low. They try again at a lower price. They trap high, and that's your short. Nice strong signal candle closing below the moving average, and you're done. All right, guys? So back down into that range from there. Now, we can also apply the same breakout patterns. You know, for example, a 1, 2, 3 breakout. I have no problem being a seller on this. I just don't want to sell where everybody's going to be buying. I want to be selling after we turn bearish. So hold that pullback. 1, 2, 3 off the moving average. Mark the low, mark the high. I like to mark that little guy right there too. That creates the sweet spot. And now we look for that short off that 1, 2, 3 reversal in this case. Okay, it'd be a 1, 2, 3 breakout and a 1, 2, 3 reversal. I know I'm very clever, right, with that name. And then, of course, our target is back down to retest those lows. Okay, same thing goes to the upside. The upside, as you can see, if I go out a little bit further here, we got a big old top up there at 1503, right? 1503. That's where they're going to be hunting for. So if we do get that breakout, again, kind of think about this as a, right, 1, 2, 3 breakout. Mark that high, mark that low. Now we know where our pullback's going to be. Again, don't try to buy the first pullback here, right? Unless your crystal ball works better than mine, you won't be able to predict, because you can't just rely on a big strong move, right? Look at that strong move. Look at that strong move. How would you know that the strong move up is going to go through it? You just won't. So you'll be guessing. And we can do better than guessing. I realize it's not as fun to wait. I realize, the movies and television make it seem like it's go, 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 trade, trade, trade. Your broker will love you. Right, you'll get a nice fine bottle of wine every Christmas or Hanukkah or whatever we celebrate, right? For the holiday every year, right? But there won't be any money left in your account if you overtrade like that. So wait for that 1, 2, 3, buy that pullback from there, and again, that will qualify the breakout from there. All right, guys. So breakout patterns are in play right now on gold. Just wait for the proof, though. If there's one thing, hopefully I'll rub off on you here on this video, and that is go with the momentum, respect momentum. Find the most reliable support and resistance, okay, whatever it is, range-bound markets, trending markets. You'll learn a whole lot more about that in the free course, and then wait for the proper setup, right? As I always tell my clients in the trade room, it's momentum first, then your pattern, right, your setup pattern, and your signal. Okay, momentum, pattern, signal. Now, we're going to use that 3-step process tomorrow morning and every morning in our trade room, which always reminds me to come out and join us tomorrow morning. We've learned a lot here tonight on this video, but tomorrow we're going to put this stuff to work. So getting registered is really easy. If you're on the YouTube channel right now, I'll put all the links in the description of the YouTube video. So grab the description. Again, I'll put the links in the upper right-hand corner as well for that free course. But to get registered and join me tomorrow morning in the trade room at the opening bell, dig in the description of the YouTube video. There'll be a link in there for you to register as a new member. If you're on the blog right now, if you're on sidewaysmarkets.com, our trading blog, there's a big button right below me tonight on the blog. Just scroll right down, hit that blue button. It says join the trade room and get registered there. Or if you're on the website at schooloftrade.com, it's the advanced course. The advanced course includes all of our classes, all of our trading sessions, our ongoing support. You'll learn all the details on our website. And don't forget, I'm always here too if you want to give me a call. Right? We got live support right below my ugly mug tonight, right? Toll-free phone number on the left-hand side. Call, email, right? Heck, if you're here in Los Angeles, grab a cup of coffee and talk about more. Right? Whatever you do, though, if you need more help, trade with us tomorrow morning in the trade room, or give me a call, use live support, send me an email, drop some questions in the comment section below. Keep getting better every day. And hopefully, I'll see you tomorrow in our trade room at the opening bell. Guys and gals, if I don't see you guys tomorrow morning at the opening bell, have a great day tomorrow. We'll come back and check on you tomorrow night for the next edition of this nightly newsletter. In the meantime, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.